Hi, today we have the pleasure of speaking with a longtime FinTech and technology leader who's seen many financial services transformations over the years. I'm Jeff Wood. We have the pleasure of speaking with Bill Zielke today to talk about the major challenges facing today's technology and FinTech companies. Bill, welcome. We're glad to have you here. Would you give our audience a little bit of an overview of your background as a revenue growth leader? And then we'll talk a little bit about the challenges that you've seen over the years.
Yeah, happy to, Jeff. First of all, thank you for having me. I appreciate the Alexander Group's opportunity to join you guys today. As Jeff mentioned, I'm Bill Zielke. I've looked after financial services and FinTech for more than 30 years in my career, some with some large enterprises like Fortune 500 companies like PayPal or Fiserv, as well as some emerging companies more in the early technology, you might even say some venture-backed in the startup space. Most of my roles have really been looking after the revenue line as well as the marketing activities, the whole go-to-market strategy. Some of the brands like CheckFree, we were going to market in more of a B2B fashion and looking at how we acquire companies. So the sales team and the model that we had there was certainly important to what really we were focused on. Other companies like PayPal were really trying to take new products into new markets. So that had the opportunity to really see that type of opportunity as part of my background. And then here more recently in the last probably 4 or 5 years, a variety of different startups, more venture-backed, Silicon Valley type funded companies that are literally introducing or launching disruptive products into brand new markets. So we're launching people, we're launching technology, all in to really create revenue lines.
Great, that's amazing, Bill. You've seen a lot of disruption over the years. You've seen a lot of things work, a lot of things not work. Right, at different companies as they've gone through evolution and change. Today, if revenue leaders fail to get it right, they could have problems with low revenue growth, they could have conflict between their internal teams, and then they could also have a very poor customer experience. When you think about some of the top 2 things that revenue leaders have to deal with to be successful through all these changes, one of the things we've talked about is getting the coverage model right. Now, I'd love to get your perspective, Bill, as you've seen a lot of different types of companies. How do you think about single account owners and bifurcated owners where you have separate hunters and farmers in the model?
Yeah, you're right, Jeff. I've definitely seen it all from early stage companies who launch one model or enterprises who perhaps need another. I think it's a great question because I really think it depends. It depends on the circumstance of the company and really what they're trying to accomplish. For example, in one emerging company, we're introducing a product to displace an existing set of products. The way you go about that is you're talking to the same people who are doing something one way and you're trying to convince them to do another. You need a specialist. And so a coverage model that has a dedicated hunter made a lot of sense there. In other models, we had high market penetration, maybe really trying to squeeze it out for that last 10, 15% market share before we had the entire market swept. We needed an entirely different type of coverage model. And more of a blended type of role so that we could focus on renewals and scaling. So I think it really depends. I think the smartest thing that most companies can do is try to step back and say, what am I trying to accomplish? Where am I in the journey of launching this product and penetrating the market and making a hard assessment of what those metrics and those goals are. So I really think it depends in terms of how you calibrate that model to the specific needs of the company.
And it's probably not always just the needs of an individual company. Those needs may change over time. So you may be with a given company, but as they introduce new products or value-added services that they need to cross-sell, you might have different selling needs as their portfolio expands, or they need to worry about renewals, cross-sell, upsell, adoption. It may take different skill sets as they evolve. Do you have any thoughts around how you've seen that work, or how frequently do you need to think about changing the model?
You know, Jeff, I think you mentioned an important word, change. Change is inevitable, right? And you have to prepare for the change. And I think when a company has a product change or a market condition that's changed, we've certainly seen that over the last few years, they've got to step back and reassess. They've got to first decide what's important, what's the priority. Is it revenue growth? Is it expanding the team so that they can acquire more businesses? And that's really going to dictate the change. And it will shift the coverage model. It might shift the employee mix and the skill sets that you have. And it might even also shift where the company's emphasis is overall in terms of, is it more important for me to focus on renewals and expanding what I already have versus trying to acquire new relationships? At least in the industries that I've had exposure to, many of them have been largely focused on acquiring new entities. You grow by acquiring more new customers. And that's part and parcel to being in more of the FinTech space and needing new relationships and launching new products. But even within that, over the years, we've had to adapt the coverage model that we put in place just because our priorities might have changed. We may have launched a new product and now that product's more profitable. So you shift your coverage model or tweak it. And again, I think doing those assessments periodically, maybe it's year to year, gives the organization the insight to say what changes are necessary. The one thought I would have is they can't be afraid of that change. They've got to look at it every year, and they've got to be able to focus on putting that in place in a timely manner, despite maybe how disruptive it might be.
Yeah. And the change can be very difficult to navigate in some cases. You mentioned skill sets. Mm-hmm. You may need different skill sets. Maybe some people don't want to do some of the roles if you have to make that change, right? So you have to find a way to adapt and evolve to get the right mix. And we've seen some companies, if they wait too long for change or they wait for the change to be forced upon them, it's often a very difficult outcome, right? Very difficult to navigate. How do you think about seeing that change ahead of time? When it's the right time, and how do you think about beating the need when it actually comes down to getting ahead of the curve?
Yeah. I would say, listening to your marketplace, listening to your customers, and then looking at the data. The data is king. If your penetration isn't expanding at the rate you want, if the competition is perhaps winning deals over and above you, you might have a symptom in your model. You either have a skill set issue, or you perhaps might not be rewarding the right behaviors that you want the sales team or the account management team to be pursuing. So I think, how you know is just by continuing to study that data, continuing to listen. In a lot of cases, listening to your reps. They'll tell you, hey, I'm struggling to hit this goal, but these other goals are a lot easier. Maybe the company ought to tweak the model a little bit to give me more runway or give me more ramp in this other area. And so I think listening to some of those needs can be a great leading indicator as well. But the data rules. You've got to kind of keep up with some of those key metrics.
That's a great call out, Bill. Like listening from the field and getting that voice of customer for how are people reacting to your value prop, the selling motions, the value prop that the sellers need, right? That can really be a driver of helping you decide when you need to change because your buyers are starting to change. Yeah. You hit, Bill, on one of the things that once you get the coverage model right, you really got to make sure you're driving the right behaviors. You want to make sure you're motivating the team. And as those roles change, the primary responsibility of the role may change, the rules of engagement may change, and you certainly need to change the comp plan to motivate folks. Yeah. What types of challenges or things have you seen over the years for how to think about some of the compensation plan changes as you change your coverage model?
Yeah, it's a great question. I'd always say, and somehow focusing on the sales operations piece, I always say your plan is always good as your greatest rep because they're always going to find holes in the plan. Whether it's a hole that they can exploit, or in other cases, whether it's a hole that really just is trying to align with what the company is trying to do. So I think how you line those things up is you first decide what's important. In the enterprise acquisition businesses that I've been exposed to, signing that deal, getting that logo is often identified as the top priority. But when you start to peel that back, you figure out, well, it's not just acquiring them with a contract. Maybe there's an integration that's required or a setup and a marketing set of activities that client then needs to do. Getting those submetrics equally identified and captured as part of the plan components can be critical, often to the company's success. A new relationship's no good if they just sign a contract and never do anything with it. So you've got to reward them along the way in order to get the right behavior. You've also got to decide who's going to do that. Is the sales rep going to just sign the contract and hand it off? Or are they going to stay with it until the contract's been implemented in the accounts live? Those are the different types of things that I think the company has to think through. And again, having that process or a process to look at those and figure out where the value is will determine whether the sales team is going to be successful or not.
You also talked about the evolution of where somebody is in their life cycle, their products that they have, how early they are in that stage. One of the things we often see is, you go sign the logo, you need to really land in the market and get your footprint. Mm-hmm. But then over time, and the time period may vary by company, it really becomes, well, when is the revenue going to come? When do we hold people accountable to the actual results? And there's a number of complications with that. Maybe implementation time. It could be, do you want your hunter sticking around to try to drive adoption? How have you seen that play out over time? And are there certain tactics that you've thought about given your specific situations you've seen that you've used or have seen work?
I love this question because I'm living it right now in my current role as Chief Revenue Officer over at BitPay. where volume is king for us. You can't just acquire a logo and not see the volume come out the other side because our revenue model is dependent upon that volume. And so having someone stay with that process, initially we said, hey, it's just going to be the sales rep. And what we've learned is, well, that takes time away from them continuing to sell in the field. So now we need an account manager, a separate role. And over the years, my experience has been having two different roles has tended to be more effective when you're more volume-based, because that's our key metric. But you've got to look at what's most optimal for the organization. The organization has needs. They have cost targets that they need to hit. So maybe that model doesn't always fit. So I think, again, it kind of comes back to it depends. But what we're living right now is having that bifurcated model tends to make the most sense for us, because you have somebody sign, help implement, and then you still have somebody that stays with the account that helps them scale. And so that's just part of what that process needs to look like.
And as you described, you've got to drive the revenue eventually, right? And that you're accountable for that. But you also want to make sure that you're paying at the point of influence for sales and rewarding them for some long sales cycles potentially.
That's right.
So sometimes there may be splitting up and paying some up front and paying the rest on the back end, right? There's a lot of different levers that you have to think about, but the situation is always different, and you have to think about what's right for that point in time for your company.
Yeah, couldn't agree more. We've even shifted that percentage of that payout further back in the process to get a little more volume emphasis. Because sometimes if you get it too far forward, you get the contract, you get the integration, you may not ever get the volume, and you really haven't accomplished what the organization really needs to do. So getting that balance right may evolve year to year. Maybe one of the things are the KPIs, if you will, that you're changing. But I think it's important that you go through that process to assess what that emphasis should be, because you're right, and that the rep does need to get rewarded. Our average sales cycle is 6 to 9 months. The rep puts in a lot of time and a lot of effort. The marketing team puts in a lot of time and effort to help acquire those relationships. So you want to just make sure that you optimize exactly how fast you get them through the funnel and how quickly that volume can follow.
Great. Bill, thank you so much. Great advice from multiple companies that you've seen over the years. Some parting words as we think about, any guidance you have for CROs and CMOs that may be facing some of these challenges across coverage and compensation. Two of the primary challenges they have to address, or if they don't get it right, they run into some of the issues we talked about earlier. Do you have any parting words for the audience of things that they should be thinking about to better navigate change?
Yeah. I guess my parting words would be, don't be afraid of change. Go through the exercise to really assess what's important and change them, if not year to year. And I know that could be a frightening thing because sales doesn't like change, right? You're often perhaps putting, or at least believe that you're putting some of your top producers at risk. But they want to change too. They want to evolve too, and they certainly want the opportunity to earn more. So by introducing some of these changes, you find out how to optimize the sales rep's needs with the organization's needs. And that doesn't have to wait. A lot of times I think you launch a plan or you launch an activity or a go-to-market model, and because it took so much energy and it took so much effort, it's almost like a glass house. You're afraid to tweak it. But I'd say don't be afraid to do that. Change is good, I think, in this regard, because you can really find that healthy balance.
Great. Bill, great words of wisdom. Thank you so much for your time and your experience and sharing that with everybody. We look forward to seeing more success from you over the years. So thank you so much.
Thanks, Jeff. Appreciate you having me.
Thank you.